All right, we're on learning objective 11.2, and we're going to talk about journalizing some basic payroll transactions. Okay, so this is a huge current liability on most businesses' income statement, and it could be called salary, compensation, commission, bonus, or benefits, wages, any of that. But payroll is a huge part of most businesses. Okay. So they give us an example here. Ryan Park was hired to work at Smart Touch Learning, and he earns $15 an hour for 40 hours. Then the company has to pay time and a half. Okay. And it looked like he worked over 2 hours, and his time and a half, 15 multiplied times 1.5 is 2250. So you can see his straight time, 40 hours at 15 was 600, and then 2 hours at 2250 was 45. So his gross pay is 645. Here's something that I always like to tell students. We'll talk about this in legal environment of business. If you have me or if you have somebody else, this is something I really like students to see because there is a lot of employers out there that will take advantage of people who don't know this rule. Okay. So they have to pay you time and a half for over 40 hours. So this is what I've heard students tell me that their employer had them work 60 hours in week one and 20 hours in week two. And they will say, but you didn't work over 80 hours for the 2 weeks, so you don't get overtime. That is actually illegal. That is not how that works. You are supposed to be paid 40 hours straight and then 20 hours here of overtime and then 20 of straight here. It is not combined on a 2 week basis. You are they are required to pay you time and a half. Now, of course, there are salary jobs that don't even get into overtime, and sometimes you work less, sometimes you work more than 40 hours. Um, and that's something you have to sit down and calculate. Is it really worth it to me to be a salaried employee? A lot of times it is, but then a lot of times you're asked to do things outside of those working hours. Okay, so let's jump on down here to gross pay and net pay. I think all of us at our first job, we probably looked at our pay stub and like, where is my money? I thought I was going to get paid more money, but there's a big difference between gross pay and net pay. Gross is what we were just talking about. That was his gross pay was 645. He might see $300 or $400 of that in his net pay. Okay. There is a lot of things that go into um, calculating from gross to net. Gross is always going to be the most, and net will be the least. Okay. So we have some things that are required. We have federal and state income tax. We have Social Security tax. And the Social Security tax is usually what gets most people. We have FICA tax, and we have two portions. We have OASDI and HI. This is 6.2%, and then that is 1.45% to give you. We're going to add those together. Doesn't really do that on, I don't think it does that on the slides. So this is 7.65. Okay. That is just your portion. That's just the employee's portion. Okay. So when you are self-employed, you're going to multiply this times two because the employer matches that dollar for dollar, sorry. And then you end up with 15.3% just in FICA tax alone. Okay. So over my 22 years of teaching, I have had students tell me they wanted to be self-employed because they felt like they could make less money. And here I am to tell you that is not the case. You need to make more money because now, when you become the employer and the employee, you're required to pay 15.3% right off the top. Okay. Like that doesn't include your federal, state income taxes or anything else. So being self-employed, great, but just remember you're going to be responsible for the other half of your FICA deductions. Okay. There are other things that are required by federal, state, and local law. Here in Arkansas, we do have a federal and we have state law. States have federal income tax. We have a state income tax here. There are some states that do not have a state income tax. Okay. Optional deductions would be insurance premiums, retirement benefit, retirement contributions, and charitable contributions. If your employer is matching in your retirement plan and you're not matching to get the maximum from whoever your employer is, you're missing out because you are going to get paid more money just to save. Okay. So try to max that out as much as you possibly can. Okay. Um, we're not in tax class. They talk a little bit about your income tax withholding and how it is based on, you know, if you're single, married, or anything like that. I I just give this example. When me and my husband first got married, I think the very first year when we did our income taxes together, we ended up owing money because we had this little box checked married, and then when our incomes got added together, then we ended up being in a much higher tax bracket than was calculated. Okay. So this is just personal preference because I don't miss that little bit of money that comes out every pay period. So we always check the box single. And right here where it says dependents, we always put zero. So they're holding the absolute maximum out on us as possibly can be taken out. I don't miss that little bit that's being taken out. I would really miss it when I have to owe two or three thousand dollars at the end of the year because I'm probably not going to have that. So that's just my personal preference. I've heard people say you can't make the IRS your savings account. Well, I'm not necessarily making it my savings account. I'm just trying to make it to where I never owe any money. I would much rather get a refund than to ever owe either the state of Arkansas or the federal government. Okay. All right. I've kind of already talked a little bit about OASDI and Medicare benefits. So, and we know there's this one was the 6.2 and this is the 1.45. Okay. So we're going to look at an example here. There, before I jump on that example, this OASDI does have a limit. That limit changes every year. Right now, I wrote it down. Right now, it's currently 176,100. It is the summer of 2025. So that's going to be different. It's going to change. And I believe this problem is not using that current because, these textbooks are always a little bit behind, but there is a cap on the 6.2% up to a certain amount. Like I said, it's currently right now $176,000 right now. So what that means is once you hit that point, you don't have to pay any more OASDI tax, but you do have to pay it. Doesn't matter how much you make, you're going to pay the Medicare tax on every dollar that you make. Okay. So here we said, assume that James Cullen, another employee of Smart Touch Learning, earned 142,700 prior to December. Collins' salary for December it was $10,000, and his FICA tax withheld from his paycheck is calculated below. Okay, so he had, I'm guessing their limit here is 147,000. And prior to that, he had 142,700. Okay. So the difference between that's 4,300. They're capping that out. So the rest of that, he doesn't have to pay OASDI on. Some students say, oh, that's not fair. He made all that money and he doesn't have to pay any OASDI on the rest of his earnings. It's really good to have a cap on this because if there's not a cap, then you're not capping somebody's Social Security benefits later on. Okay, so there's a cap on that. So we obviously want to stop charging them for extra OASDI that they're probably not going to be able to have a benefit from because they're going to be capped on the benefits later on. Okay. So that for the extra 4,300 will be at the 6.2%. Okay. The whole 10,000's at 1.45. There's no max on that. Okay. So that's $145. So here is the FICA tax. This is just for one employee. Okay. Um, there are optional withholding deductions, insurance premiums, retirement savings, union dues. I think unions are pretty much outdated at this point. There might be a few industries that might need some unions, but like we have so much government oversight on different businesses that unions are just kind of, I don't know, they're just kind of going by the wayside. I don't know that they're doing anybody any good at this point. Gifts to charity, I think in the next example they give us is United Way at CBC. I think we can donate to have money donated out of our check for United Way because United Way of Faulkner County does not contribute any money to abortions. So that we feel like that's a good charity to donate money to. I'm not sure if we still even do that anymore. We used to once upon a time. Okay. So we said, okay, his final pay period, December 31, we're going to assume $180 for health insurance. I really wish I had that cheap of health insurance. And $20 to United Way, and 20% for income taxes. That's grossly simplified because that calculation is a rather large calculation, um, way beyond the scope of this class. We would touch on that. If you're an accounting major, you take me for individual tax, and then we'll get more into depth on that. Okay, so gross pay. And then we have the employee tax. They just 20% of that. That's a lot, isn't it? That's a huge chunk for income tax. We already calculated the OASDI and the Medicare tax on the previous one. Health insurance and then the $20 contribution. So we had withholdings of 2612. So this is gross and this is net. Okay. So there's a lot of things. There's a big difference between those two numbers. Okay. All right, let's talk about this payroll register. And I always think of an Excel spreadsheet when I see a payroll register because that's what it reminds me of. So you can kind of see you have each employee here, and then you have their beginning cumulative earnings, which is important because they're going to get capped out on that OASDI. So we got to make sure we keep up with that. And then ending cumulative earnings. And then we have the OASDI for each employee. Medicare, income tax, health insurance, charity fund, and then total withholding. So we got a good total here. Now with this total, we're going to make a journal entry. Okay. We're going to come down here. This journal entry is being taken from these totals, all of those right there. Okay. So we are debiting the salary and wages expense. That's the gross. Okay. Then we're crediting salaries and wages payable. That is the net. Okay. All of these other things in between gross and net are payables, payable, 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 because our employer is going to remit these three to the federal government, and then they'll send the employee health insurance premiums, they'll send that to that company, and the United Way, they'll send that. They're acting as a collector for us. Okay. So that's the employee side. Okay. And then once they get ready to pay them, that net gets debited to the salaries and wages payable, and we credit cash. Remember, that's probably a checking account. And this is probably an electronic funds transfer that will be automatically put into your checking account. Okay. So now let's talk about the employer side. I've already mentioned this other half of OASDI and Medicare. So in this example that they're about to go through, we've already calculated that number. Then we have the state unemployment compensation tax and the federal unemployment compensation tax. We call it the SUTA and the FUTA. Okay. So they give us another, we're still looking at, I think we're just looking at one employee, and then there's all the employees. Yeah. So they're going to show the distribution of payroll for an employee who earned $1,000, assuming the employee had not reached any of the payroll limits. So let's kind of go through these. We have the net, that net take home, the OASDI, Medicare, income tax, OASDI on the employer side, and Medicare. Okay, look, those two are the same, employee and the employer portion. Okay, then we have the FUTA. The FUTA is 0.6%. That's not even 1% on the first 7,000 of earnings. And then the SUTA is 5.4% on the first 7,000. Now, if you are a good employer and you don't lay people off and you don't have a lot of unemployment claims against you, this percentage can go down based on how many people you have drawing unemployment off of your business. Okay. All right, so now we're going to journalize the employer's side of the payroll. So we're going to make another journal entry. We're going to debit payroll tax expense for 2000. We got the OASDI. We got that from the table. All of these are coming from those numbers right there. Okay. We calculated some of that in the previous one on the employee side. We have our FUTA and we have our SUTA. So just because an employer is paying you $15 an hour, they actually are paying more than $15 an hour to have you as an employee because they've got things on that side that you don't see. It's not a deduction out of your check. These are all things you don't see. Okay. So employing people is very expensive. Okay. That's why I usually tell people don't really complain about your job because, it costs a company a lot of money to have you. Yes, you might be making your company a lot of money, but you've got to be making them some money for them to pay you. Okay. So that's the employer side. Now they're going to pay it. Okay, they're going to remit all of this. Remember, all of these are payables. They this kind of is crazy because it looks like we wrote one check and we paid all of these. That's probably not how it's going to be. These three are probably going to be in one check. The health insurance will be separate. The United Way will be separate. The feud and the SUTA will be separate. But nonetheless, to combine the entry, that is the way we have it. Okay. Internal control over payroll is very important because we've just talked about it. It involves money, right? And money can be stolen really easy. Okay. It can be stolen and money can walk out the door. So remember that arc that I drew out to you, authorization, recording, and custody. So payroll being automated is a really good thing rather than being prepared by hand. I don't know that anybody prepares it by hand anymore. Although my mother was a bookkeeper, and I do remember as, a young child, I remember her doing accounting and payroll for my uncle all by hand. There was no computers. My mom did not know how to use a computer at that point. So it was all paper and pencil, and she did all that. And I look back and I don't even know that I could do it. I could probably figure it out, but it'd take me a minute to do it electronic. But my mom did it all by hand. Okay. But having that money automatically put into your checking account is a good control. When I first started working at the hotel when I was 19 years old, our boss put paper clipped our paychecks to our time cards. And even then, at 19 years old, and I did not have near the education that I have now and experience, I was like, that's just really easy for anybody to take my check. And that's exactly what happened one day. I mean, we were a small business. She thought she could trust everybody. And so then we had to start walking into her office on Fridays at noon and get our check. We didn't have to show IDs because she knew who we were. It wasn't like we had thousands of employees. I think we only had 30. So she knew who everybody was. So we didn't have to do IDs, but I was really thankful whenever we went to automatic draft because the money goes in there automatically. I don't have to make an extra trip to town to get my paycheck, take it to the bank, and do all those things. Okay. Hiring and firing should be separate from the payroll preparation because the hiring and firing is right here in authorization. The actual payroll preparation is recording. So crossing those functions is not a good thing because somebody could authorize a fake employee and just get a check. Okay. Time clocks and direct deposits are also used to have internal control over the payroll function. All right, I will see y'all in the next video.